Mayuresh Joshi is also with us from William O'Neill and Company. Mayuresh, anything that stands out for you from the auto pack post these numbers?
Afternoon, Rima. So I think what Mangalam was mentioning and the numbers that came through for the month of November, a few stocks within the space itself are probably standing out at this point of time. Within the commercial vehicle pack, Ashok Leyland is trading above key pivot levels as we track at Sunil. And our own sense is that the kind of activity improvement that you probably see Q3 onwards, and the kind of model and product launches that they've done, specifically in terms of tippers and the last mile connectivity, expectation in terms of passing through of prices as well because of increased input costs. I think the margin stability has probably got maintained as far as Leyland's numbers are concerned. Market share, more or less, the very stable across quarters as we see. So I think Ashok Leyland trading above key pivot levels and assumptions of industrial activity improving with government capex increasing multiple over the next few quarters should hold this stock in good stead. The other number that probably stood out was also Escorts, as Mangalam pointed out. I think two things standing out again in terms of the farm equipment of the tractor business, the opportunities that come through in terms of the export markets, in terms of the horsepower of tractors itself. Below 50 HP, I think there is the major dominance that Escorts have at this point of time. Decreasing acreage of land that you probably see affects Escorts to a large extent in this subsegment itself. And railways with 900 crore order with better margins and a healthy overall balance sheet probably ensures return reliability, and the EPS-RS rating remains extremely strong. M&M, the other one to probably watch out for, 3-4% from key pivot levels on the O'Neill lens. But I think a good all-around show as we see it, and the sum of parts in terms of their NBFC and the IT companies also add up to the overall valuation.
All right. Hi, Mayuresh. Afternoon. Mayuresh, we had the management of Monte Carlo yesterday who joined us, and they are talking about a 20-25% growth on the top line for this year. Margins are around 20%. Now, you are tracking the textile space as well. From there, what do you like? We have a lot of weddings. We have the festive season. The mood is back as well. What's your pick from that space?
Afternoon, Nigel. So absolutely, I think 32 shark weddings that are probably expected to go through over the next few months. And cotton prices have come off. So I think one of the more important aspects for the entire sub-segment or the segment itself was that cotton spreads had gone through the roof 3 or 4 quarters back in time. But with cotton prices coming off, you're expected to see better spreads coming through. Now, vertically integrated companies within this space itself can do exceptionally well, is what I feel. Maybe I think a quarter or two, maybe might see some amount of margin miss. But with inventories coming off and with the newer inventories at lower prices, vertically integrated players like a Vardhman, players like a KPR Mill, as an example, can over a period of time do well. Yes, they're lagging in terms of the O'Neill lens on the RS strength. But as that starts picking up, I think there can be significant traction there. On the Indian context itself, you're probably looking at $100 billion market within $1 billion market, Nigel, in the Indian context. And a large part of that is controlled in terms of the apparel market and around 20% by technical textiles as well. I was hearing the Monte Carlo management. The second half is obviously expected to be relatively better. But I think companies within these spaces, as I mentioned, with a relatively improving RS strength and vertically integrated, should command better margins, better realizations, and with lower amount of debt onto their books, the leverage should meaningfully play out. It might take a couple of quarters, as I said, but stocks like Vardhman, KPR can get.
Mayuresh is with us. Mayuresh, look at names like L&T Technology Services, solid 9% gains on very large volumes, by the way. Usually when we have these overnight rallies on NASDAQ, I mean, there is rub-off, but not like this. This is a pretty large move on a large name as well. Any thoughts on this on this stock or the IT space?
So generally, I think it's seen a very good move from the bottoms, probably created a few weeks back. And the expectation largely is that IT as a defensive space should start holding out. Now, within the spaces itself, the larger outsources, like you mentioned, LTTS, LTI, and because of the corporate adjustments, specifically on that front, you probably expected to see more revenue and cost synergies come through. Now, the extent of slowdown will actually determine the kind of order flows that will come through in Q4 for Indian IT companies as well, as far as the financial year is concerned. And therefore, I think we are adopting a wait and watch at this point of time. The ER&D companies, you obviously seen huge bouts of correction in stocks like Tata LXI, but there is huge potential out there within the space itself. KPIT is one more stock where I think there have been multi-billion-dollar deals that have probably got announced. But largely, I think it's a very late-stage base on the O'Neill lens. Valuations still a little bit more on the higher side, in our opinion, when you probably stack up the 5 and 10-year median price earnings average as well. So yeah, I think good moves on the sector as a whole, but we're still continuing and maintaining a neutral stance.
Okay, all right. So not entirely convinced that this is the move all the way higher. Maybe a bumpy road ahead. Mayuresh, thank you very much. Good speaking with you. Appreciate you joining in.